Mr. Kamath, thank you and grateful to you for spending so much time with us here this evening. I'm going to take a little bit more, so if you could please be seated. It's always wonderful to hear from you, and you gave us a very sort of comprehensive synopsis of what you believe the road ahead for India looks like. I know you've said this previously in interviews that we've done, that it is a 25-year runway that you believe India has the ability to enjoy. You also gave us a very quick synopsis of what the world looks like today. And I want to pick up on some of these issues that you spoke of in the context of another event that we are going to be marking, and it's a pretty significant milestone that we will be marking this week itself, where India will overtake China in becoming the most populous country in the world. And it has its advantages and it has its downsides as well. You talked about productivity gains, you talked about technology and technology adoption. You know, we often speak of our demographic advantage. How do you see this milestone, and what do you believe it means from a risk perspective, especially when we talk about the India story over the next 25 years?
Shereen, it's a very appropriate question at this point in time. The first thought that comes to my mind is it's a positive, for a very simple reason. If we were at a stage where we would have built a lot of the things that we need to build, I would have said, you know, we could be facing a challenge. But given that by all assessments we have a 25-year runway, to build essential things, we are not talking of anything esoteric, to build essential things, we need the people and we need a young population. We need that young population not only to build but also to consume. And I think that provides us a unique advantage in terms of having the force, as it were, to build and having the ability to consume what we are producing. Of course, we will export as we go along, but I do not necessarily believe that we will export the way some other countries have been exporting. Because we have a large domestic market, and at the growth rate that we are going, we can well afford to have domestic consumption as a primary driver and exports as a subsidiary set. So this comes in at the right time.
Okay, you believe it comes in at the right time, but I'll just press you a little bit more on that. So you talked about the consumption power and specifically the consumption power of the domestic economy. And while we are seeing investments pick up and continues to be largely driven by government capex at this point in time, the question though is, for this young population, are we going to be able to provide the kinds of jobs that we need to, especially in an era where you're talking about the possibility of chat GPT taking over jobs, making automated jobs redundant, or making jobs redundant on account of automation? The impact of that, do you believe it is going to be, as many headlines are suggesting, apocalyptic, or do you believe that this is something that we will be able to digest as we move forward?
I think nothing is static. Things keep moving. I would still talk of the India advantage. And let me put one thing in context. 5 years back, who would have believed that India would be such a big, I use a very simple term, back office to the world, you know, call it managed services or whatever. So much so that everyone is caught by surprise. I wasn't, I can tell you, when we say that our services exports are now not only, you know, probably the fastest growing side of exports, but we now are a net surplus on that. Everybody thought that we will keep spending money on paying royalty payments and so on. So that's turned a positive. So if these, for example, just staying on managed services, if this vast number of jobs are going to be created here, we need people to run those. So maybe if there's a shift away from some of the other things, because you know, people may not be required because technology has evolved, but in the newer things that are coming onshore through this process of back offices being set up here. I'm just taking one example. And when you talk of these back offices, we're not talking of 1,000, 2,000 people. We are talking of just now, you know, people are talking of virtually running into hundreds of thousands of people. So I think things will evolve. And then when you talk of a person, you remember when the first wave of white collar, I would say, momentum was seen in the country, 2000, 2001. CRISIL had done a study, I remember, that for every white collar job created, 4 new jobs in the service sector were created around it. Now, these may not be full jobs, it could be partial jobs. I see the same thing happening as these white collar jobs are proliferated. So I'm not worried about that. And then I think we also need to look at, just look at the last 2 or 3 years, the number of Provident Fund registered people. If you look at these, it tells me a different story. And having the field force, as it were, is a big plus.
That indeed is a big plus. I want to, pick up on some of the things that you spoke of, and you talked about, of course, your favorite subject, which is the fact that there possibly needs to be a rewriting of economic theory when we talk about linking inflation and interest rates. I know that you have, for a while now, believed that the RBI and the MPC don't need to hike interest rates like the West is hiking at this point in time. It is a hard pause, or that is what we're given to understand that the MPC has taken at this point in time. Where do you see interest rates, at least in India, in the near term?
No, I see. When I was a practicing banker, I never commented on this. But now,
now you have the liberty to be more vocal
being
about
an armchair, maybe a layperson, I can say a few things. But I think the RBI has done absolutely the right thing in over the last 3 years. Not one misstep. So I can't blame the MPC. I do not know what happens in the MPC, but sum total, that's what you have seen. I think India has taken a right stand. The issue that I have is with the West, economic theory that's coming out from the West, which in earlier periods influenced us. And now when it comes their turn, they're happily saying, that doesn't matter. So I think we need to understand that everything that the West says may not be appropriate for us. And we need to apply our mind and see what is right and do what is right. So that was my context in what I had said on this. But there's another aspect to this. Today, if you see the adverse impact of a rate increase could possibly be more harmful than what we thought. For example, if you look at a bank, today probably 70% of its assets that it holds are retail assets, on which there's an EMI. And you have a situation where you have a rate increase. It could push a whole lot of that repayment beyond retirement. So these are all risks which, today we are talking of risks, which need to be put into context when we look at this. I'm sure RBI does it, but what I'm asking is, does the larger body of economists actually look at this? Are there concrete numbers? Is this worked out? Is there a spreadsheet or whatever algorithm that you have worked out to say what is the impact and the consequence of this? Not just look at one indicator, look at it as a multivariate, and then let us see. I'm sure the Reserve Bank has done this. But I want a theory on this which is exploited here or outside. I would think the same thing would apply today to the US. So far they're not bothered, because with the sort of rate increases that you see on the mortgage front, from a year and a half back, a mortgage was around 3.5% or 4%. Today you're talking of 7.5%. How many people would move beyond retirement in terms of it? I have not yet seen the numbers. But these are things that today need to be crunched into economic theory. I'm talking of pure economic theory that comes out of schools to understand and appreciate. And I'm not seeing that in India, which is unfortunate.
Well, I'm going to take your view and your opinion on what we're seeing happen as far as the global banking sector is concerned, because you were very clear about the fact that the Indian banking sector today, along with corporate India, is far more resilient. Balance sheets have strength. We've just come off record numbers for a whole bunch of banks, including ICICI Bank for this quarter. But, on what is happening with global banks at this point in time, a jaw-dropping number, a $100 billion deposit plunge for First Republic Bank. What do you make of this and the long-term implications or the medium-term implications of how this is likely to pan out?
My straightforward answer is that it indicates that, again, vast holes in the risk management practices by both regulators there and the banks themselves. When this happened, I went into the balance sheet of that particular bank. And what struck me was I read it 3 times. I went into the P&L. The P&L has got a profit, nice profit. And the NPAs are in basis points, not even percentage points. You come to the balance sheet, item number 2 is, held to maturity instruments. Within brackets, the valuation is given. The value is shown as almost 100. And within brackets, current valuation is 84. So I said, am I reading right? And previous year it was 97 or something like that. So where has this, what has happened? Then it struck me that this is where the hole is. And it's not accounted for. It is just a line item. So if this is how you are looking at risk, then obviously you have I'm sure there are lessons which have been learned. I do not know how other regulators in other domains look at it, but this is not so in India. So I can be proud of what is in India. This sort of a thing can never happen in India. So that gives me confidence to say, apart from capital adequacy, which is in high teens, pristine NPA, net NPA levels lower than in some banks, 0.25%, and then this sort of very tight risk management practices, I think make us one of the safest banking systems anywhere.
Well, that's good to hear. You were talking about the role the regulators have played, and you believe that that's been a stellar performance here in India. In terms of what we are seeing play out in the domestic context, but more importantly also around the world, if there were one or two areas where you believe there needs to be strengthening of regulatory oversight, what would those be, in India specifically?
No, I would think that today, specifically, the needless move to corporates, who are the borrowers, and individuals who are the borrowers, where there may be a need for educating the borrower as to what is good and right. And this is not necessarily in the banking space, it is entire financial services space, where people are sometimes almost coaxed to say that, well, it doesn't matter. You get on your app and you swipe left or right and the deal is done. The deal is not done. You are basically building risk on your balance sheet as a consequence. I think so both sides, people who are providing this sort of a product, and on the other side, people who are consuming it, ought to be educated in a way. Similarly, if on a corporate front there is mismatched lending happening, is not linked to your ALCO situation, and borrowing also on the same basis, I think you are exposing yourself to risks when an event like wild fluctuation in interest rate happens. So I think there is there is need for better understanding of risk, even in your borrowing book, not lending book, in your borrowing book in the corporate world. And I think gentle education probably is required, not necessarily very hard. But at the retail individual end, I think something more dramatic needs to be probably done.
What more dramatic change would you like to see?
It says that I would put it very simply as to heighten the risk. Anybody puts out an ad saying XYZ, I think the regulator should have come out and say that these are the risks, or ask that company to spell out the risk very clearly, and not in that blinding speed at bottom where you say that, like in the public issue, they used to say that subject to market risk. It's not no longer the case. I'm taking it as an example. But in ads which are propounding that, well, there is no risk in your transaction, I think there needs to be a counter.